Hi, good week to all. This is Calvin here again. Welcome to this week's latest edition of our weekly technical outlook on the major stock indices. I hope that you guys have a long weekend break for those who actually celebrate Visa Day. So, as usual, I'll be covering the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, as well as the German 40 index for this week of 16th of May to 20th of May 2022. So, before we start, let's take a look at the disclaimer slides first. All right, so let's take a look at the raw momentum analysis across the globe from US, Europe, and Asia on the major stock indices. So last week has been a dismal performance as seen on the major US stock indices. So all the indices from SPX 500, the Nasdaq 100, the Dow Jones Industrial, as well as the Russell 2000 all ended the week with a weekly loss of close slightly more than 2%, and the worst performing being the small cap Russell 2000 down by negative 2.55%. And also to take a note that over here is that last week performance is much more disaster or much more weaker than its prior week performance as illustrated over here. But one thing positive in terms of momentum, downside momentum seems to have slowed down as indicated by the difference between the last week performance and its prior 4 week average. So we could see that the SPX 500 is the difference, the momentum uh, changes has started to slow down by negative 0.32%, and in fact positive on the Nasdaq 100 at 0.57%. So what it means over here is that based on the rate of change of momentum, seems that the downside momentum has started to abate. We could actually start to see a potential short-term rebound that could actually take shape in a couple of days. In fact, the rebound already started on last Friday. But however, we're talking about a weekly trend for this week. We got to take a look at other elements to actually determine has that weekly bearish trend has reversed to the upside or not. So later I'll be sharing with you these particular elements to actually take note of. And pretty positive on the Hang Seng Index as well the Hang Seng Tech Index, almost unchanged for both of them. The kind of a stark difference between last week, very weak performance. So last week was actually the weakest, down negative 5% and down close to negative 10% on the Hang Seng Tech Index. But however, fortune seems to change a little. So, but nevertheless, we still got to take a look at the trend analysis of other various technical elements to decipher whether has their medium term or their weekly trend reversed to the upside or not on the Hang Seng Index. And pretty bad for the Nikkei 225 as well, down negative 2.13%. And the star of last week was actually the German DAX index, which is positive 2.52%. So later we're going to take a look at the German DAX, what's going on in terms of its technical configuration. That means taking into an integrated approach to actually determine whether will we start to see a bullish trend for this week on the German DAX or not. So now get started by taking a look at the SPX 500 first on our CMC platform. All right. So before we jump into the technical chart, which is the technical strategy chart, which is the 4 hour chart, to actually decipher the directional bias for this week, we're going to take a look at one step back. That means a higher time frame from the 4 hour chart, which is the strategy chart that we use to determine our trend bias for this for a weekly basis. On the daily chart, it's a helicopter view to determine what's the trend we could see over here. So very obviously, from the high of the all-time high in January this year at 2022, printed at this 4805 level. So what we could see is that it's been tracing down in the lower high and lower low. And all in all, right, most importantly, it has been traded below the 200-day moving average, which is in orange, and as well as the 50-day moving average. And most importantly, latest technical element is that last week it has really reintegrated below this former expanding wedge resistance that has been taken out earlier in December 2022, retested it on February 2021 and March 2021 before it start to shape higher high and we call it maintain this a major uptrend phase. So what we could see over here is that what it means that major uptrend phase, at least from March 2022, has more or less been damaged. So right now we could actually start to see, in fact, the start of a major downtrend. We talk about a multi-month downtrend. So from a weekly basis over here is that will we start to see a potential counter trend to actually have a bullish bias? That means a potential counter trend. But however, if you look at the technical elements to actually determine a counter trend move over here, doesn't seems to be in place from a multi-week perspective, or at least a 1 to 3 perspective. Why? Because the daily RSI hasn't reached the oversold level yet, and also there is no clear signs of a exhaustion. We call it in downside momentum. That means there's no bullish divergence. When we have bullish divergence is over here, we start to see price action shape lower low, whereas the RSI continue to shape lower low as well. And most importantly, also it hasn't hit the oversold region as indicated by 30% or below. So what it means that that downside momentum could actually continue after this rebound, this particular short-term rebound that has taken shape on Thursday. Okay, as you could see from here. So intermediate resistance will be at 4107, which is definitely the swing low area of 24th of Feb to 16th of March, broken down, now turns into a pullback resistance. And the key resistance to watch for this week will be 4310, which is confluence with the 50-day moving average, and as well as this swing high of 26th of April and 6th of May that refused to break on the upside and lead to this last we call it recent slide that was seen on the SPX 500. And so if you recall that our last week's strategy we were bearish, and we are looking for it to push down further towards 3840/10. It printed a low on last Thursday, 12th of May at 3858, which is coming very close to that support and target level of 3840/10. And what we could see right now is a potential short-term rebound that is in progress. So we are expecting a further residual push up towards 4107. So what's 4107? Is the swing high area, the former swing low area of 24th of February, which I highlighted earlier on the daily chart. Right now, also the descending channel resistance, the minor one, taking from the high of 21st of April 2022. So just to recap, this is a 4-hour chart from here. So what we could see over here is that as long as 4310 medium-term pivotal resistance continue to hold in this short-term tactical rebound, we are still looking for another potential down leg to actually come down, to actually hit the next support at 3760/3720, which is the lower boundary of this short-term descending channel, and as well as a cluster of Fibo extension level. So bear in mind over here is that what's 4310 previously highlighted earlier on the daily element. And also if we do a Fibo retracement taking from the high of 30th of May, take off the high of 30th of March all the way down to last Thursday low, is very close to the 61.8% Fibo retracement as well. Key golden ratio. So as long as 4310 holds, not surpassed to the upside, that means there's no 4-hour close above it. We're still expecting another leg of push down to actually shape new lower lows. So however, if a 4-hour close starts to actually break up, we will start to see an extension of this short-term tactical rebound towards the next resistance at 4520. Okay, now moving on next to the Nasdaq 100. Okay, so the Nasdaq 100 over here, what we could see is very similar trend configuration on as seen in the SPX 500. Price action still below the 200-day and the 50-day moving average. So the 50-day moving average now is acting as a resistance at 13,580. So what's 13,580? 13,580 is also the swing high area of 25th of April and 4th of May. Price action refused to break above this level and led to the recent decline in price action. And right now we have an intermediate resistance at 12,940, which is the former swing low area of 14th of March, and as well as 18th of May 2021 that has been decisively taken down on the downside from here. And what's interesting is that downside momentum still remains intact. What we could see is that yes, the RSI managed to come very close to the oversold region, but there is still no clear signs of a bullish divergence. Lower low in price action, and as well as lower low in the RSI as well. There's no clear higher low on the RSI. So what we could see is that yes, downside momentum still remains intact from a medium-term perspective, as seen on the daily chart. So what we could see right now is a potential short-term tactical rebound back towards this 12,940 region level. Why do I say so? There's will be a tactical rebound is by looking at the 4-hour chart over here. So from the 4-hour chart, what we could see is that prior to this bounce that was seen on last Thursday, the 4-hour RSI start to shape this bullish divergence on the short-term basis. So 4-hour represents the short-term basis, and the RSI now is still has room to actually come close to this key corresponding resistance at 64 and 55%, which actually equivalent to that 12,800 level, 12,940 level that is highlighted on the 4-hour chart. So a bit of residual push up first towards 12,800 to actually potentially end this short-term tactical rebound. So as long as 13,580 holds this key medium-term pivotal resistance, which I highlighted earlier on the daily chart, and also if I were to draw a Fibo retracement from the high of 30th of from the high of 30th of March all the way down to last Thursday low, 12th of May, is actually correspond very close to the 50% retracement. So as long as this 13,580 holds not surpassed to the upside, we could potentially see another impulsive down move to actually hit 11,600 slash 11,440. So that was actually last week's support or target that we mentioned. So give or take, last week low was actually at this 12,000, I mean 11,692, which is almost reached the 11,600 level. But overall, technical elements are still potentially skewing towards more on the bearish side after this short-term tactical rebound. So still looking to actually have a further potential down move towards 11,600 slash 11,440, and further down we'll start to see 11,000 figure level slash 10,960, which actually being determined by the lower boundary of the short-term minor descending channel that was drawn from the high of 5th of April. Previously, the previous rebound managed to cap at this upper limit of this descending channel. So that is upper limit of the descending channel acting as a resistance now is at 12,800 level. So definitely we'll be looking to actually see another fade this potential down move towards 11,600 slash 440. Then thereafter 11,000 figure level, which is so determined by a confluence of a cluster of Fibo extension level. But however, if we start to see a 4-hour close above 13,580, then we could actually say invalidate this bearish move to see an extension of this short-term tactical rebound towards the next resistance at 14,315, and a break above it, we should start to see a further push up to retest the 13th of March, and as well as 5th of April 2022 swing high area at 15,280 next. All right. Now moving on to the Hang Seng Index of the Hong Kong 50. So the Hong Kong 50 did that slight as expected and hit the support level or target zone at 19,200 slash 18,990 before shipping this rebound on last Thursday. And right now, what we could see is that the 4-hour RSI is coming very close to a key resistance at 67% level, which is also close to the overbought region level at 70% as well. So all in all, what we could see is that previous two rebound in price action on 4th of April and most recently on 5th of May managed to be capped by this a minor descending resistance in place since the high of 10th of February. So I will be actually adjusting the key medium-term pivotal resistance, tighten it to 21,300 level. So as long as 21,300 level holds, we're still expecting another leg of potential down move to actually retest last week low at 19,200 maximum slash 18,990. But however, if we start to see a 4-hour close above 21,300, then we could see a further extension on this ongoing short-term tactical rebound to actually retest the key major resistance at 23,000 slash 23,380. So just a recap, what is this major resistance level? Is actually the former a former long-term circular ascending trend line support that is in place since the great financial crisis low. Managed to help the pandemic low of March 2020, but failure to it did a bearish breakdown earlier this year in mid-February. And right now, it's actually the pullback is forming a pullback resistance at 23,000 slash 23,380. So that is the major resistance zone that we highlighted on the 4-hour chart. If this 21,300 Titan key medium-term pivotal support is surpassed to the upside, a 4-hour close above it, then we see an extension of this tactical rebound towards this major resistance zone at 23,000 slash 23,380. Now, moving on next to the next Asia indices that I would like to share with you all will be this Japan 225 or the Nikkei 225, we call it in our platform. So this Nikkei 225, before we go jump onto the 4-hour chart, on the daily chart, it kind of traded sideways as well. Yes, shipping lower lows. So last week it actually hit our support level at 25,700 level. So overall, the key medium-term resistance to watch for this week will remains at 27,760. So what's 27,760 is in fact the swing high of 21st of April 2022 and confluencing with this descending trendline resistance that is in place since 14th of Sep 2021 high that has previously kept previous rally on the 18th of November last year, 3rd of January this year, and most recently on the 28th of March this year as well. Failure to break above this level. So definitely this level will be key resistance to watch going forward to this week. So what's the strategy for this week? Pretty much unchanged. So we have maintained that bearish bias. So I'm still looking for a bit of residual push up to actually test 27,410. Maximum will be the key medium term pivotal resistance at 27,760 before another push down to retest the support at 25,700 slash 25,410. But however, if we have a 4 hour close above 27,760, then we could see a potential more pronounced rebound to take shape to actually retest 28,680 in first step, which is the swing high area of 18th of January 2022, and as well as 29th of March 2022 high. Okay, so right now we're taking things one step at a time for this Nikkei 225 to actually fit this potential rebound below 27,760, looking for a more bearish bias to actually shape another leg or push down to retest 25,700 slash 25,410 at this moment in time. All right. So now, last one will be the German 40 index. So for the German 40 index, right, last week, it did shape a rebound. Okay, but this rebound still fall short or being stopped at this 14,330 resistance level. So what's 14,330 is actually the congestion zone over here from 7th of April all the way up to 5th of May, where prices refuse to actually break above it, and as well as this descending trendline resistance that is in play since its current all-time high level at 5th of Jan 2022. So definitely this is a key resistance level to watch for this week, 14,320. RSI still remains kept right now right below this 52% key correspondent resistance level. So all in all, right, we are still looking for a potential push down on the German 40 index for this week. So still remain unchanged for the key medium-term pivotal support for this week will be at 14,320. So if we start to see, as long as this level holds, we could see another leg down to retest last week swing low area at 13,600 slash 13,340 in the first step. But however, if you see a 4 hour close above 14,300, then we see a push up towards the next resistance at 15,030. So what's 15,030? Is a pretty significant resistance as well, which is the former swing low area range support from 4th of October 2021 last year all the way to 14th of February 2022 low this year that previously price action managed to trade sideways, but thereafter a breakdown below it lead to this reason a steep decline all the way down to 7th of March low. So this will be a 15,030 is that pullback resistance level, which has a key psychological memory. So definitely this is a level to actually watch. So if price action managed to actually store at this level, the best will actually is try to reassert itself again. But for this week, 14,320 will be the key support level. 4 hour close above it, then we'll see a short-term squeeze out to test a more significant resistance at 15,030 level. So all in all, what we could see right now is we are in the midst of a kind of a short-term tactical rebound. But however, there's no conviction that the short-term tactical rebound will lead to a more pronounced multi-week corrective rebound for now. And we're still expecting for a multi-week perspective for a potential resurgence of this bearish trend to actually continue across the board. So thank you very much, Tam. I see you again in my next video.